Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 1st of the 3rd to Friday the 5th of the 3rd, 2021. I've written up the weekly flows to get us underway, and we're going to start after that, so I'll write up the daily flows. Right, so the week then, the 1st to the 5th, Euro dollar minus 156. So that means over this week the Euro dollar lost 156 points or pips, Euro yen plus 44, Euro pound minus 48, pound dollar minus 88, pound yen plus 138, and dollar yen plus 178. If you look at the actual flows, you can see that we had a positive opposed driver in the dollar at plus 422. Front and backdoor flows mainly coming out of the yen at minus 360, next out to the euro at minus 160, and the pound was the positive rock at plus 98, and that was an activity of plus or minus 520. So we're going to stop it there, so don't go away, and then we'll write up the daily flows. Right, welcome back. I've just written up the daily flows, so let's make a start then. Monday, rattle through them. So positive secondary driver, positive opposed driver in the dollar on Monday, plus 50. Front and backdoor flows mainly coming out the yen at minus 41, the euro at minus 30, and the pound was the positive rock at plus 21. Activity of plus or minus 71. Tuesday then, we had a positive opposed driver in the euro this time at plus 88. Front and backdoor flows mainly coming out of the dollar minus 79, out of the yen at minus 49, and the pound was the positive rock at plus 40. Activity plus or minus 128. Wednesday then, we had a negative opposed driver in the yen at minus 87. Front and backdoor flows fairly evenly, but coming out of the pound at plus 60, going into the pound at plus 67, into the dollar at plus 60, and the euro was the negative rock at minus 40. Activity plus or minus 127. Thursday then, we had a positive opposed driver in the dollar at plus 259. Front and backdoor flows mainly coming out of the yen at minus 206, next out to the euro at minus 116, and the pound was the positive rock at plus 63. Activity plus or minus 322. Finally on Friday, we had an unopposed positive driver in the dollar at plus 147, no backdoor flows, but the opposing negative flows were coming out of the pound at minus 72, euro minus 67, and the yen was the negative rock at minus 8. Activity of plus or minus 147. Right, so just remind ourselves, over the week then we had the weekly flows. We had a positive driver in the dollar at plus 422 opposed, and we had dollar strength over the week, and mainly yen weakness at minus 360 as the opposed secondary driver. So you're over the week as a whole, you had dollar strength and yen weakness, and the pound and the euro were holding the fort in the middle. Right, we'll rub this out and then we'll look at what happened in the wider market and then we'll do some analysis. So stop it there a minute. Right, we're back again then. So if you look at the dollar index, which is the basket of 6 currencies, you've got this sort of like W effect. It's basically the dollar is basically up near the previous high there. Gold. Now gold, if you look at a longer term sort of chart, it basically is operating here. This low here is approximately 14.35. We're operating about 16.98 at the moment. So and this has been basically the situation for gold. Rising dollar, sustained rise in the dollar. Gold not liking it, coming off. It's now down to this high here, and the actual fairly long-term recent low is 1435. So if it breaks this area, stand by for seeing 1500, etc. on gold. Oil. Right, what have we got on oil? Oil's got a similar sort of W to the dollar index. It's up near the previous high. So, and now if we look at equities, you've got, right, let's draw this in here. You've got this sort of effect for Wall Street and the S&P, and the tech looks here. So basically, the tech on a shorter term outlook has come back harder than the Wall Street and the S&P. But if you look at the longer term situation, the tech was well in advance. It had, if you remember, we had that big ramp up at the end of last year. So arguably the tech had further to come off anyway. Right, what else have we got? US 10-year bonds. They're looking like that. So the price has dropped considerably, which means yields have come up, and we're operating just off the lows there. The Bund, which is the German equivalent, effectively. The Bund has sort of done that effectively, which is the Bund price is higher relatively than the US. Therefore, yields in Europe are relatively higher than yields. So yields in Europe are relatively lower than the US now. So that's the way to look at it. So what else have we got? Let's just make some space. We've got copper. Right. Copper is the metal, the commodity. Then basically you had this, it caught up with equities initially, then it had 1, 2, 3, 4, 5 pumps. It came back down to the second pump, then it came back down ultimately to its before it decided to get going chasing equities, and now it's back up to the second pump. So we're here now. So copper's had a pretty wild ride, and US steel. Basically looks, it's operating about 0.2 from the floor in our terms. So pretty weak on US steel. Right, just get rid of that, and then we'll just do a good roundup hopefully. Right, now what's been happening this week in terms of the data flow? Well, Tuesday the 2nd, we had weak German retail sales. Came in at minus 8.7%, if you remember, and we had strong CAD GDP at 9.6%. Wednesday we had strong AUD GDP, so strong AUD data, Australian dollar, but we had weak ADP at 117k. Thursday we had strong AUD trade balance. So the theme here is strong AUD data. We had the Fed Powell speech, which and the bond market didn't like it particularly, and sold off bonds and increased yields. And Friday we had a pretty strong NFP at plus 379, which didn't really tie in particularly well with the ADP. As we said, it's a very different measure, but a lot of people lump it together as a forward indicator, and if anything, it's very poor. But anyway, that's another story. And then we had the CAD was strong over the week, with oil on a tear at plus $66 a barrel, basically. Now, with regards next week, we've got China, a lot of China data coming through. Now, the China story is quite interesting because, as I've alluded to this week, in July, which I know is a little way off now, what we're in the third month, so 4 months away. So we've got this quarter. Once we get to the end of March and we start the second quarter, this is the key quarter for China, because in July, when the second quarter ends, which is at the end of June, China is celebrating its 100-year anniversary of the regime in China, and they will want to show have a good showing for July, basically. You know, without being too cynical, it's likely that data is going to be progressively improving in the second quarter for China. Now, who benefits from a strong China? The AUD normally, 30%, just slightly under, of the Australian economy is linked to exports to China. So the AUD is of interest as this notional China data comes up next quarter. So we're coming into the last month of the first quarter, but next quarter is going to be pumped, we believe, for this China story. Now, that being the case, you're looking at and what's been happening in the market. The AUD on the data cycle, which, by the way, we're going to do the next video, the sister video today. If you look at the AUD data cycle, it will tie in, and we'll talk about this in the next video. But that's an interesting one. And if you look at the AUD NZD pair, well, the NZD as a complex is operating at 67% above the modelled floor. That's the 7 FX pairs, and it's only the Swiss franc at 70%. So it's knocking on the door at the top. And the AUD as a complex is operating at 48%, so it's below half marks. And if you look at the actual pair in terms of, so the AUD NZD, it's operating at 7.5, and bear in mind this scale is 0 to 9. So it's operating at 7.5 from the modelled floor. So it's pretty much near the top. The complex is at the top, and therefore you've got this situation where the AUD, and you've got an improving AUD data cycle, the China story as we've just mentioned, and the most likely thing is that the AUD is going to vastly appreciate, probably depending on the lags and depending when they want to boot it on. I would suggest it will probably be just be later this month. You'll get the real ramp, but we'll see. So that is a particular interest, would be long AUD NZD for the reasons we've laid out. So we're going to carry on this in the sister video, which is the data cycle for the period Monday the 1st to Friday the 5th, so we'll carry on these arguments in there. So try and catch that. So I hope you found that useful. See you in a bit. Thank you.